Hi, Warriors. How's everyone doing this morning? We have our results, and I'd have to say that our analysis on Monday of the consensus view that the split Congress was most likely to happen, the dollar would weaken. Blake said he didn't expect 150 euro after this, and here we are. Okay, so we held the falling wedge. And, you know, if you're a believer in wedges, this wedge right here has 100% retracement up around the 116 level, where I happen to have another channel line that may come into play. I don't know how I came up with this. Maybe it was just a parallel line here. The most bullish scenario would be, you know, 118.5, where you get a quality here. Also, something I've been talking about is, as long as the dollar is weak, and you know, maybe there's another 94 is a possible target, 93.5. As long as the dollar remains under pressure, I think that the market could continue its corrective process. So here we are in the S&Ps. We're approaching where a lot of people want to short this market again, 28.13 to 24. So we'll see if we get this pump and dump. It doesn't all have to happen in one day. And if you notice, the NASDAQ really doesn't have the same wheels. I would attempt NASDAQ shorts up here around 7,300. I don't believe that we're going to make new highs in NASDAQ, even if they're able to squeeze out new highs in the Dow and the S&Ps. So I think it's done, a lot of the NASDAQ stuff. So I wanted to just show you guys what a hardworking crew that we have here. So if you're a subscriber and the midterms are going on and you're watching all the poll results, you also had to really be a subscriber. Look at all these alerts, okay? 28 alerts. Look at all these alerts that we had. So the guys were working hard all last night. I wasn't able to get into the chat room, but I'm sure there was plenty of action, spiky action that happened yesterday. Initially, we started off in the euro, we were higher, but you had all kinds of spikes. You know, you had buying opportunities here. Some people may have felt that this was it. So I just wanted to, you know, impress upon you that we're not just here during the daytime like most companies. That if there's an important event, we consider it our duty to not leave our post and keep everyone. How does one subscribe? One of my associates will put that link up there. You should see it. ForexAnalytix, the link to join. Steve, maybe you could put it up, or Stelio, so that at the next midterms, and don't wait for the next election, like, you know, the 2020 presidential election, to join. So there was all kinds of action going on last night with alerts. How did I hear about ForexAnalytix? Okay, I heard about a ForexAnalytix through some guy you may not have ever heard of, Blake Morrow. Okay, so that's how I heard about it. I heard about it when it was just an idea and in beta. And fortunately, things developed so that I was able to join the best team on the net. So we look at all these updates. You're never out of touch. And if you don't want to be sitting at your workstation, we have the mobile app, the iPad, easy for you to take out for dinner during the midterms and adjust any of your positions as things went on. You know, here's your Texas race. So I'm going to be interested to see what the crew thinks about this, if this is going to be long lasting. This break, I want to see some charts from Blake and Steve, and I don't know, I'd love to see what Greg is thinking and Andre's thinking now after this event. Something I am looking for, since I still believe the dollar's in a bull market and this is probably just a correction. I don't think that was a major top. I also don't believe that we've had a major bottom in gold, even though we're up today. And I'm stalking the gold market for potential shorts. Let's take a look at it here. I see the potential of one more new high. If we could get through 1236, can take us up to 48. Actually, we could have a third drive developing here. Let's look at the, let's get the RSI in here. Up here around the 1250 level, cleaning out these highs, but it's still very possible that the highs are in. Okay, so I'm expecting eventually us to take out this breakout area of 1210 and a complete capitulation under 1160. And longer term targets in silver, you may think that, I might be smoking something, but if you just look at silver here, this range, call it ballpark without the wicks, pretty much 14 to 1480. And if we take out 14, that takes you down to about 1320, 1313. So we'll see how much longer they can hold up the metals, and that'll be dependent upon, I now believe, the dollar. I think everything depends upon the dollar. That's why we're in FX. It's a fulcrum. It's the center of the universe that all other asset classes spin around, including stocks and bonds and commodities. So just want to let you know that we have this trial, and for $1 you could check us out. Whoever asked, how does one subscribe? Investors.com. What about that, Bill? They're a great site, and they're aware of talent because they live stream us. Tomorrow will be live streamed on investors.com. Okay, and I also, what's also very important besides being right in the market is having the right broker. Okay, because a lot of people are very active, and instead of making themselves wealthy, they make their broker rich. So you want to find out from Trent and Justin at Forest Park FX if you have the right fit, how you could get ForexAnalytix for free, and if you're in the US, how you could get some rebates. There's also no law against having more than one account. These guys have relationship with multiple brokers. I like to call Forest Park FX a broker of brokers. So very important to have the right broker that suits your style, and these guys will help you find it. Oh, you first saw us. Okay, great. Well, welcome to our family, Bill. You may want to consider this is the tip of the iceberg, our webinars here. We do have a chat room that I think I was timed out of. I'm going to have to, oh, here's Amanda again. I'll skip it. I have to get a hold of my boss. Oh, now they're letting me in. Last night I tried to get into the chat room. I couldn't. Was it because it was standing room only? Huh? Was it standing room only in the chat room last night, Blake? Okay, so here you see our chat room. We designed this. Amanda's in here. She shares all her live trades in here. Joe does a great job in here. And hey, Dominic, we have pros in here. Okay, we have all levels, but there are a lot of people, this is their vocation, not avocation. So that's another edge for you all week long, collaborating. Ziggy put a gag order on me. Okay. All right, well, I just, was overwhelmed with all the updates being pushed on my laptop last night. So I know that there's always great people in here to help everyone in here. So that's really all I wanted to say. We have an interview with someone I've never spoken to before. His name is Leo Hermosa, and he's known as a shirtless trader. So I'm going to keep him off camera, because it's breakfast or lunchtime or something like that. Oh, okay, Tom. Okay, look at that. There's a testimonial. Jason got his first check from Forest Park last month. It's a sweet deal. Okay, so we don't put shills in here. That's an actual reality. So that's Jason goes along trading all month long. He gets a check back and gets paid from his broker instead of only paying his broker. So, every dollar counts. And with that being said, welcome to a split Congress in the U.S. I think it's going to be very contentious. The Democrats will now have subpoena power. So there's going to be a lot of drama. Not that there hasn't been going into it, but you could just magnify it now by 10, especially after the last 2 years and the hostility between the two parties. So what does it mean? Subpoenas, subpoena power. So I don't know the outcome. I actually think that our president really doesn't mind. He loves to battle and have opponents. He actually thrives. That's his model, to battle with people. He has his whole life, and it continues as president of the United States. So Blake, what a great job the team did last night, keeping people informed as the election moved through the evening. I'm blown away by the dedication of the team at FX, at ForexAnalytix, because I'd say most other similar but never could be like us left people to their own devices last night. So great job, man.
It was a busy night. I mean, you had Amanda that was like 2 o'clock in the morning. She in London.
Laker, good morning, mate. I think that
sorry,
either your mic.
sorry.
Yeah, exactly.
Okay.
Exactly.
Yeah.
I'm half asleep. So
yeah, you were up all night, huh, buddy?
I was well, not all night. I mean, I got like 5 hours of sleep. I'm good.
Okay.
But yeah, Amanda was up at like 2 in the morning in UK time, trading around in the chat rooms. It was a busy night in Asia. I mean, we don't usually have 80 people in the chat room in Asian trade. Usually it's like 40 or 50, and then it gets to about 100 and plus this time of the day. But man, it was busy last night. We had so many people in there. I mean, obviously there's, for good reason. There was a lot of volatility. I'm a little irked at myself that I didn't stay long the Aussie and the Euro as I wanted to overnight, because what we did is we broke out of this consolidation, and you can see the Euro's at the 38% retracement, but really, the dollar is not liking the potential of, what we're going to have is like a gridlock legislation now. So the dollar has fallen as a result. The stock market is not doing bad. I mean, we're higher. I think the reason why the stock market is a little higher is because the outcome was as expected. Remember, we looked at, we talked about we talked about the
I think some people are surprised, Blake, that the market's higher. They were thinking that we probably have risk off, but I've noticed, that a weak dollar actually helps equities on a nominal basis, and all the through the earnings seasons, all the earnings reports, not all of them, but quite a few, complained about the strong dollar and being able to export the disadvantage. So, I believe as long as the dollar is weak, we're probably not going to have another big wave down in equities until the dollar starts heading up again.
Yeah, that could really be the case. And I was chatting with Joe earlier this morning, as he's heading over onto Bloomberg. He'll be there charting futures, I think today, if I'm not mistaken. Anyway, if the dollar is weaker, then the equity markets are probably going to continue to hold up, just as you pointed out. Now, if you look at the let's go to the euro dollar first of all. So we stopped at the 38% retracement. You have to also realize that intraday, the euro, divergent relative strength. You can see this last push higher, divergent relative strength. Take the Aussie, which has ripped higher to, we're outside of our channel, but also overbought and divergent. I think the Aussie's probably going to consolidate here. I personally, I want to be a buyer of the Aussie on dips now. So, dip down to 72.50. I'm all over it. Kiwi, is very bullish. Now we have the RBNZ today. We hit 127% extension, 261% extension of this move, way overbought on the 4 hours. So, we're probably going to, consolidate, maybe drop back to 67.30 before, the RBNZ this afternoon. Now, speaking of the RBNZ, the market is expecting, and you can see here, the market is expecting the RBNZ to keep rates on hold. Okay, you can see, 1.75%. All right, now, does that mean that they won't signal a possible hike? They could, especially if they look past the China trade issues. But I still think the China trade issue is still a big deal, and the RBNZ might be a little hesitant to be too hawkish. But regardless, any dip now in the Kiwi, especially down to like 67 cents like this, I'm a buyer. We get a move like this, I'm a buyer. I'm using the dotted lines to kind of illustrate what I'm thinking here. But overall, the dollar seems to be weaker, and you can see the dollar testing really key support right now. This is trendline support. It's the 618 retracement of the last up move. It's all very strong support. We could probably do this. Very strong support coming in through here. So I mean, I'll set an alarm just for myself actually while I'm here. A drop below the support and the dollar is going to be in some trouble. But again, will a weak dollar keep U.S. equities supported? And a lot of people, like you said, Dale, a lot of people are looking at the equity markets going, wow, well, why aren't the equity markets weaker? Democrats take the House, Republicans retain the Senate, but it's still, we're still going to have a lot of, now more political uncertainty moving forward. Why are stocks higher? I think the reason is exactly what you said, is the dollar is just going to be the driver at this point in time. So if the dollar continues to weaken, that should keep the equity markets from having a really big fall. And I think that is a correct statement on your part, that equities are going to have a hard time pulling back as long as the dollar continues to stay weak. Now, does that mean that the dollar, will continue to sell off? I personally think it will. I think the dollar is going to continue to sell off, and I actually think that the S&P is still in recovery mode. You can see we're past a 50% retracement. 618 retracement comes in at 28.11. We could very easily make our way up here. You know what? I'm going to use this. The S&P can very easily make our way up here before turning lower again. And I'm not long nor short equities at this point. I don't have anything on as far as equities go, but I do think that we are into that time of the year, getting into the Christmas holiday season, where the market tends to be a little bit more bullish. Christmas, Hanukkah, just the holiday season in general tends to be a little bit more bullish for equities. Do I think it's sustainable? No, I actually want to sell a rally. So personally, if I'm hoping the equity markets continue to rally a little further, because I'd be willing to put on some shorts. But that doesn't mean in the near term we can't continue to get a rally. And I think a lot of market participants, equity market participants, are probably looking around a little stunned at how strong the stock market is. Another thing that you pointed out, Dale, which I'm going to talk about as well, is I'm going to talk about gold. Gold is what I've been watching all night long last night, and we probed support. We probed support last night in this triangle. Couldn't break down. We probed resistance in the triangle, couldn't break out, and we're still consolidating. I do believe that a break above 1240 is going to be extremely bullish for gold. Now, I know you were looking for a short in gold. You had mentioned that earlier.
Yeah.
However, you know, for me, I'm more looking at gold as an indication if we're going to see continued dollar weakness or not. So if gold breaks out, you know, and we break this 1240 level, I am expecting for the euro dollar to continue to strengthen up towards the 116. I will also reiterate something that I said a couple of days ago. To carry the euro dollar long right now, it's expensive. The interest rate differentials are continuing to widen. So, you know, as the Fed continues to raise rates and the ECB is stationary, it's becoming increasingly expensive to be on the long side of the euro. But that doesn't mean that dollar bulls can't get squeezed further. And I think it's more of a positioning predicament for dollar longs right now. I think everybody and their mother's, brother's, uncle's monkey, grandmother's monkey happens to be along the dollar at the moment. So, you know, as dollar, you know, longs get unwound and maybe it takes the euro back to 116, I think upside is limited. Now, what does that mean for you? You go back to gold. What does that mean for gold? Well, that means that gold, you know, we might break 1240. We could quite possibly see 1260 again, maybe even 1280, you know, get a recovery towards the 50% or the 618.
Possible.
Yeah, it's possible. Everybody's short gold too. So everybody's short gold, everybody's long dollars. So, you know, that position unwinds a little bit. We're gonna see higher prices. And again,
yeah, this level 1240 looks a lot like it did at 1214. Well, the bears were trying to defend it before it broke out. And you know, I'd like to see one more high in gold and squeeze the shorts one more time.
Yeah, and again, this all would coincide with equity markets making its, you know, the S&P making its way to 2800. I do have to point out that the NASDAQ and the Russell are also probably going to continue to underperform. So you may say, well, I'm going to short the S&P when it gets to 2811. Well, you know, that might be the trade, or maybe even the better trade would be, hey, I'm going to short the NASDAQ when it gets to, you know, you can look at the NASDAQ here, you know, when the NASDAQ, you know, maybe gets back to 7350 or so, and the S&P looks toppy, then you short some of these, you know, the NASDAQ names. But regardless, I think stocks are going to continue to bounce. It looks like the dollar is going to continue to weaken, and gold may firm.
Are you surprised, Blake, that the yen is only down 20 with
no
dollar weakness?
No, that's a good question, Dale, and I'm not. And okay. as long as the dollar yen, and by the way, I tried to scalp the dollar yen a couple of times last night. It was, God, so frustrating. I think I made. I scalped actually a few times last night. I think I made like 10 or 15 pips in the dollar yen. And by the way, my position sizes are pretty big. So, you know, I was scalping, and you know, I can't stick around long if it goes against me. So the dollar yen, I think I have to recount what I did last night, which is,
wow, it went to 78.6. I didn't even notice that last night.
Yeah, we spiked up. I can actually recount it here. So we spiked up here, and then we came down, and I shorted at like 113.47 or something like that, and I think I got out at 114.37, like 10 pips. Nothing big, you know. Again, my position sizes are pretty big, but it wasn't a very big move for me. And then all of a sudden, you know, like literally I got out of the position, it dumped like another, you know, 20 pips. And I mean, like right when I got out, not even 6 or 7 seconds later, the bottom fell out of it. And I was so frustrated. And then I turned around and I went long the Aussie dollar. I went long the Aussie dollar at 60, something like that. And then it moved up to like 67, and I took 5 pips out of it. And then I wanted to, then it actually reversed, and I'm like, you know what, I actually really want to take the Aussie dollar on the long side overnight, but I just didn't want to do it. And then I woke up this morning and because I knew we were pushing this channel resistance. You can see how we pushed out of the channel. This by the way, this channel has been intact since the beginning of the year. And this is one of the other things that tells us that gold's probably going to go higher. The dollar is going to continue to weaken. I mean, look at the Aussie. I mean, this is in the face of a Chinese trade war. The Aussie is showing signs of life. Yeah, and I knew the Aussie was going to break out. Anyway, I'm a little frustrated this morning when I got up and I saw the Aussie where it's at. It is overbought. I'm not going to sit here and start buying the Aussie when we're up against resistance, where relative strength is divergent, RSI on the 4 hours overbought. That doesn't mean I want to short it either. Let me go back and say again, yes, what I said to you guys yesterday. Just because I don't want to buy something doesn't mean that I want to short it. It isn't I need to buy or sell. I can also not have a position. So when I look at the Aussie and I look at it right now, I'm going to tell you it looks very much like this to me. It's too strong to be shorted. It's too overbought to be bought. So what do? You just stand aside. That doesn't mean it can't continue higher. That doesn't mean it can't reverse, but that doesn't mean that I need to short either. A lot of whenever I get asked the question, well, Blake, if you're not going to buy it, why don't you just short it then? It's not that. You have to understand that there isn't only two answers there. There's three. You can sit on the sideline. Like I said, the Aussie's too strong to be shorted. It's too overbought to be bought for me. For my standards, so I'm just gonna have to sit here and wait. I'll wait for some sort of dip, and I do think a dip down to 72.50. I'm gonna try to take advantage of it as long as equities look supported and gold doesn't look completely horrible. That's how I'm gonna try to play the Aussie today. But I need everybody to understand that, and because it's so common when I give people my analysis, it's like. I go, well, I don't want to buy the Aussie right now. It's a little overbought. Then they automatically start shorting, and it's like, dude, that doesn't mean you want to short it either. You have to know that there's risks here shorting it because we're breaking out. Like the Aussie's actually breaking out. I actually think if you buy the Aussie right now and you close your eyes for a week, you'll probably end up over here somewhere. But that doesn't mean there's going to be better places, more strategic places to buy it. And that's what I'm looking for moving forward. I hope that made sense to everybody here. Anyway, with that being said, I know my colleague Steve is here and Stelios as well. Good morning, gentlemen.
Good morning.
Oh, in unison. It's like the Greek choir over there. What's happening?
Oh,
if it was a Greek choir, we would have both said Kalimera, Blake.
You would have bought what?
We would have said Kalimera.
Oh, Kalimera. Good morning. Good morning. Yeah, that would have been awesome. So anyways, how are you guys doing over there?
We're good. We're
Very
good.
Yeah.
Stelio, so how do you feel about the rally in equities this morning? I mean, equities are up. They're despite the election, results, and you can see there's going to be gridlock in Washington. Stocks are higher. How do you feel about that?
Well, it's funny you should say that because yesterday I wrote to the chat sometime in the afternoon. I said that, no matter what happens tomorrow with the elections, I'm sure equities are going to be higher. And we all laughed about it. But the thing is, at the moment, it's what you're saying. It's trading with the dollar. So as the dollar is depreciating, equities are going higher. I don't get it. I think this should be, this election result should be theoretically slightly, not terribly bearish, but it's not bullish. So I don't understand. I don't understand why they're rallying. So I agree with Steve. He's looking to sell into the strength.
But Steve, are you and going into that comment really quick, and then I'll pass it over to you guys. Is it too early to sell in the strength right now?
It might be, but I have no problem with that because I started building. I shorted 1/3 of a position just 3.5 handles lower from here, and I'm looking to add at the previous high that we had at around 28.20, and I'm looking to add higher as well. I'll feel, perfectly fine if I have an average position which is at around, let's say, when I have a full position at around 28.25, 28.30, because I do believe that even if this ends up being a corrective move, and even if it's the most bullish corrective possible outcome, which is going to be something like a range, I think we're going to have another leg down. Even if it doesn't break to new lows, it should approach at least the 26.90 support once again. So personally, I feel absolutely fine. I did the same thing last week. I started shorting 1/4 of a position and I closed it on a profit on Friday because I thought, okay, what the hell? I mean, during the weekend, the Republicans might try to pull a rabbit out of the hat, ahead of the elections. So, since we didn't move higher for me to build a bigger position, I might just book it. And, I'm looking to have the same kind of approach here. And I feel good about it because I think that even if this is a correction, we're not moving straight to new highs from here. I think that's a very, very low probability. Very low.
So this could be like a B wave, if you will, like the initial move down being the A.
Yeah, exactly.
Maybe a B recovery wave, and then the C wave could be a big one on the way
or
down.
we can end up being on a triangle. But even if that's the case, the closer we get to, for me, the line in the sand is the confluence of the previous support resistance and the 78.6, which coincide roughly at 28.70. So the line in the sand for me is that. As long, so the closer we get to that, I think the more appealing the risk reward is to be looking for another move lower, even if that isn't to break to new lows, as I said.
Got it. All right, guys. Well, hey, I'm going to pass it over to you. I want to thank everybody for being here today. And for those of you guys that are active in the Forex Analytics community, thank you guys for keeping me company last night. And I'm gonna give you an advance thank you for keeping me awake throughout the course of today's session. It's going to be one of those days, I have a feeling. But
Blake,
yeah.
you put together the strongest team of FX analysts and traders I've ever seen in my career, and it hasn't been a short one.
Oh, well, thank you very much. I've got a great team here, and just to reiterate, you asked, somebody asked how you heard about Forex Analytics. You were one of the first people that I called to tell about this project that we were doing. So I'm glad to have you on the team. So
it's beautiful to see something just be an idea and see it turn into a great reality.
All right.
It's been great to ride this with you guys.
All right. Well, same here. All right, guys. Have a great day. Thanks, everyone.
See you later, Blake.
Good luck,
Bye-bye.
Blake.
Stelio,
Steve and Stelios, you too.
Yeah.
You guys are the boss. You two are bosses. You guys put together a great team. I mean, I've been around a while, so I'm not just saying this to be a shill.
everybody's contributing.
I've seen a lot, huh?
I think that everybody's contributing, and we're like an engine. Everybody does their job properly. That obviously includes you as well. You've been extremely helpful to build this community, and
it's a Ferrari, man.
Yeah, exactly. Only top-notch component, right? So I know before we go to the technicals that Stelios had some comments on
Yes.
macro and fundamental stuff. So Stelio, go ahead. What do we have?
Yes. A couple of things. First of all, data-wise, it was very quiet, apart from the elections, obviously. So we had some German industrial production numbers that beat slightly. Then again, we had Eurozone retail sales that missed slightly. So overall, there was not much there. We also had the UK Halifax house price index, which rose 1.5% year on year. This is dropping slowly, but it's not in negative territory yet. So, it's dropping, but it's not crashing, let's say. Now, the other thing I want to say about the RBNZ, which is later today. We obviously had a few hours ago, we had some very good employment numbers, and that's definitely going to go into the mix. I think people are expecting the RBNZ to be a little bit on the hawkish side. I have a feeling they will be neutral. And this is because, central banks, they look at the big picture. Obviously, there will be some good and some bad prints, but they look at the big picture, and the big picture is still very neutral. Inflation is still below 2%, close to, but below 2%. we have to remember that last year inflation hit above 2% for a few months, and nothing changed in the central bank's outlook. So, you know, they're a little bit flexible with that. So I think it's going to be neutral today, and I think the risk for the Kiwi is to underperform. And the other thing which happened, which
the Kiwi though has already made like some huge technical breaks. We were talking about it a long time ago about this descending channel. We've broken it with, you know, with definitely with momentum. In my opinion, any pullback to retest, since you mentioned the RBNZ failure, in my opinion, any pullback to retest the 67 cent area is going to be approached as a good buying opportunity, most likely. And needless to say, and we were discussing that last week, Blake also, I remind you, we have a new series of, if you go to ForexAnalytix, to our blog area, this is free for all, by the way, we have a new series of daily little blog posts that have to do with chart of the day. The first chart of the day in this series that began on Monday was actually, I contributed a little bit in this one as well, actually. It was the, as you see here, the Kiwi yen and its potential of a quadruple bottom. If you remember, we were talking last week, and you know, I kept saying that quadruple bottoms is something that you very rarely see in your technical analysis. You know, something extremely rare. And just look at what happened. We broke above the channel. We broke above this horizontal resistance area, and the Kiwi yen is unstoppable. It's currently testing the 50% fib. I think it's, you know, it's going to go all the way to the 61.8 at least. So Kiwi is overbought almost against every single currency pair. Yesterday I was also showing the Euro Kiwi and the Pound Kiwi. In both cases, I said that they're obviously better shorting opportunities than the equivalent Euro Aussie and Pound Aussie. And you can see what we said yesterday. We said that even if it rebounds from there, it should move lower, but there is a high chance that this consolidation is going to be resolved straight to the downside. And this is the case, as you see. Same thing exactly happened with the Pound Kiwi. So yes, you know, the RBNZ, as you said, Stelio, might provide a catalyst for a short-term pullback. Also, let me mention here that the Aussie Kiwi, first of all, finally broke down of this horizontal confluence of supports, and now it's retesting it as resistance. So, you know, we might see some kind of a pullback, but I do really think that traders will eventually beat it up again, unless something changes from a technical perspective. It seems quite clear. Now, the question is, how will they interpret a neutral? Let's say that RBNZ comes as neutral as possible. I think that if it comes as neutral as possible, the market is going to, you know, keep on moving in the direction that it has already taken. And as I said, the direction the market has already taken is that it has already produced some very significant breaks, which I think they're going to, you know, have a continuation. So unless the RBNZ surprises to the dovish side, which I don't know, Stelio, what do you think the chances are for that happening? Low, high? What do you think?
Yeah, I think it's low. There's no reason why they should be anything other than neutral. I mean, definitely not on the dovish side. I don't see any.
Okay, so personally, I believe that, you know, neutral, if they are indeed neutral, and if that indeed produces some pullback, I think it's going to be a buying opportunity.
Sure.
So what else?
One other thing, last thing, which is interesting, came from Italy. There was the Italian government wanted to push a security bill, which had to do with migrants and how they're going to be handled. And we have to there was some tensions within the government because of this, because we have to remember it's two parties. One is
it's a weird coalition between
kind of left and a right-wing party and a left-wing party, and obviously the left-wing party, the Five-Star Movement, didn't like that much. So what did they do? They called for a confidence vote, which is you know, it can be a big risk. Clearly they had a good idea of what the result was going to be, so which is they actually passed it. So, but you know, if the confidence vote was lost, they would have to, you know, resign and make new government.
Go to elections. Making new government, or go to elections. Yes, that's true.
Yes, but
so
now
what was that? what was the whole point about that? I mean, okay, they got a confidence vote, but how are they going to resolve that? Because I guess it's neither of those parties changed their mind about what they should do with migration. So now what?
Oh no, but if now that they won the confidence vote, that speeds up the process of pushing through. So now it's going to be pushed through without any problems. So that's basically, they did that so that they can push it through without going into any
So the whole law was the right wings party, obviously.
From what I understand, yes.
Yeah.
So anyway,
okay.
And that the market showed us what possibility or probability there was of that failing, because as soon as it was announced, nothing happened. The euro barely moved, so it was almost
so basically it was a non-event. Yeah. So they did it just to do it.
Exactly. Yeah. Okay. And that was it. Nothing else has happened overnight, really. So that's pretty much it.
I think we had pretty much volatility just due to the election. So and at some point during the night, we had a lot of volatility for people that weren't up, because the market consensus was still that we would have quite probably an easy victory of the Democrats reclaiming the House of Representatives. And at some point during the night, the odds for that had roughly dropped to 50%, and that's when the market reversed course. But then it ended up that it was as initially expected, so they took back the House of Representatives. So in essence, now we have the mainstream scenario, what was expected, regardless of how volatile things became during the night. And that's why I said, if we begin with risk, no, there is a possibility of a pullback here. There is a possibility of another leg higher, but irrespective, I think the closer we get to that confluence of resistances there, the more appealing the reward to risk ratio for shorts. So that's why I started building today a position, because I can't rule out the possibility that we might just get rejected from here and move directly lower. I really can't, because I'm convinced that this move, even if it proves to be corrective, is not over yet. So, in a corrective move, you can never predict exactly how it's going to evolve. I mean, predicting a corrective move in advance is the hardest thing to do. It's a lot of guesswork, because several different types of corrections can end up playing out with very different characteristics. That's why, especially during a corrective move, in my opinion, and according to my trading style, scaling in a position is an absolute must. And the reason is
that's
because
what I'm doing in the yen right now, Steve. So you're right. I really like that scaling, because you know why? Every once in a while, you can hit something on the button. I've seen you do it, no drawdown, nothing. But it's almost better sometimes when you're early and you have a chance to build a position instead of just your initial entry. And you give yourself a chance to be fully positioned and not have to be perfect.
Exactly. It's a win-win situation, because if I have a high conviction that the move lower is not done yet, and I just cross my fingers and hope that it's going to go higher, and let's say we get rejected from this horizontal support resistance area, you can see how important it is, and we just move in a straight line lower, I'm going to feel like an idiot having zero position. You know what I mean? Because I will be telling myself, you knew that this move lower wasn't over. Why didn't you have some kind of an exposure?
On the other hand, I've worn the dunce hat by trying to be perfect and then miss opportunity after opportunity.
Exactly. So at least even if that happens, I know that I'm going to be holding onto something. I'm going to have some benefit. Now, on the other hand, if it moves higher and I end up building, let me draw it here. So the whole plan here is build 1/3 here, build 1/3 here at this high, build, let's say, 1/3 here, have a stop loss up there, so have an average position roughly here, and then expect a move towards, let's say, 26.90. Now, as we were discussing yesterday, by the way, Joe is going to be today on Bloomberg. He's going to be talking about, we discussed it with Joe, because, Joe always has wonderful ideas as well. And, we as a team, we try to do things that seem to be very contradicting with each other. We try to stay out of each other's analysis so we don't skew each other's views. But at the same time, we're experienced enough to be able to bounce ideas of each other without affecting our judgment. You know what I mean? Because what we want to provide to our clients is separate points of view through different various types of analysis. That's why we cover 5 different types of analysis. So the more types of analysis confluence, the higher the conviction that something is going to happen. But that doesn't mean that we don't bounce ideas of each other. But you know, once you pass a point that you are experienced enough and you trust your own judgment, it's not that by looking something differently than your partner does, you know, that's going to, you know, change your mind and, you know, just, you know, make you see the market in a completely different way, because all of us are on occasion wrong, and all of us are, you know, more frequently right than wrong. And, you know, sometimes you can both be right, just the market might first do something in the short term and then do the other thing in the longer term. So, you know, we were bouncing ideas with Joe today, and he's going to talk, you know, extensively, I think, on Bloomberg today, 2:30 Eastern time, Bloomberg TV Live. I suggest you watch it. So, you know, he's going to explain this whole plan, because, you know, we were breaking it down with Joe earlier today. He was giving me his feedback as well. So the whole concept here is that, you know, even if a bullish scenario plays out, something like this, we should still see some weakness. So I want to build a position somewhere here, and I believe that even if the market ends up being extremely bullish, what would be extremely bullish for me? Extremely bullish for me would be something like, let me clean that so I can show you an extremely bullish scenario, in my opinion here. An extremely bullish scenario, in my opinion, here would be something like this. Okay, something like this. But in any case, I would expect that at least the market would give me the ability, even if I'm wrong, and I see that we, you know, after, let's say, having a parabolic move higher, this is, in my opinion, a very, very serious area of resistances. So I expect at least a pullback from there. So if, let's say, we find resistance here, which I believe it's very likely if we even make it to that, and we pull back in a corrective fashion, in a fashion that shows me that the market, as it seems, is not that bearish as you expected, because this pullback is like a bull flag or like a pennant or whatever, at least I'm pretty confident that I will have the ability to exit the position I will have built at no cost. So that's my plan. So, you know, even in the worst case scenario, I believe I will have very high chances of, you know, not losing money in this attempt. So, you know, that's my whole plan here. Anyhow, having to do with the yen, with the Nikkei, sorry, and that goes well with what you're thinking about the yen. I'm still monitoring this trend line, because I really think that now we have a confluence of the 50% fib and this ascending trend line support. It can now act as resistance. You can see how it dates back to actually June 2016. We're currently testing the 200 DMA, so we first have to go through the hurdle of actually penetrating through the 200 daily moving average. And even if we do, this confluence of resistances might actually turn the Nikkei down. So in my opinion, this is not a place to be buying the Nikkei. So you know, in the same manner, this is not a place to be buying the USD yen, because it's quite a dangerous proposition. Okay. Now, having to do with the Nasdaq, you said it yourself, Coach. It looks even more bearish than the rest of the stocks, and I warned about that some time ago. If you remember, we talked about it about that last week. I said that be careful, because the vast majority of the FANG stocks have entered bear territory. And the only exemption, I talked about that actually the day that we were expecting the earnings. I remember now very clearly. It was the day that we were expecting Apple to report earnings. So I said that exact day that be very careful, because every other FANG stock is in bear market territory. And the only thing that has been holding up is Apple. But Apple seems to be building a head and shoulders formation. So today we have earnings, I said back then. And if actually, for some reason, you know, following earnings, we break this head and shoulders formation, then it's, you know, the last remaining FANG technically breaking down as well. So now Apple has broken this level, and I think that it's going to be quite tough for it to climb above 210, the previous neckline. So, there is a good chance that the Nasdaq will keep underperforming the rest of the indices when we have another leg lower. Regardless, I'm building a position on the S&P because I consider it the benchmark, for barometer for risk. So I'd rather, do it here. But it's personal preference. It's not that I believe building a short position in the Nasdaq is a worse probability. Probably it's even better. But as I said, I have more clear levels here. I already have a plan in place, and that's it. So now, having to do with metals, obviously there are two possibilities here. Gold might be coiling here for one more leg higher. On the other hand, it might have already topped in this ascending channel. Nobody knows yet. I'm really skewed about that, because at the same time, silver has failed to make a move above this triangle. So I have to reiterate what I said plenty of days ago. Unless silver breaks above this triangle, the odds are somewhat higher for both of the metals to break lower. Okay. Now, if I see silver breaking above this triangle, I think that then gold can also make that move towards 1260. In which case, I'm with you, coach. I have the feeling that those two metals haven't bottomed out yet in the medium to long term. So I would expect another leg lower following that. And you know that I'm long-term bullish those two metals.
I think that's going to be it, Steve. I think we have major cycles coming in near the end of the year or in December, January. Can't pinpoint it. So, but I'm looking for one more washout. The gold shares aren't really responding to the rally we had in the bullion. And I look at GDX, and I could come up with a target of 16. And that implies, I know people think I'm nuts, 1120 gold and 513, 520, 1320, 1313 silver. And then I back up the truck, man. I'm looking to back up the truck.
I actually have a more bearish scenario about silver, because in all honesty, if we break below this triangle, I see no reason why we can't test the 127% extension of this. So in all honesty, I can easily see silver down to 12 3/4. So yeah, but as you said, I will be treating another leg lower in those major metals as a buying opportunity.
So maybe one more rally, the dollar maybe 98.5, 99, something like that. One more wash in gold, and then something like Mark Newton saying late November, December high in the dollar, might correlate with the metals putting in lows.
Absolutely. At the same time,
I could change my mind tomorrow.
And another metal that is currently at resistance, and I wanted to point that out, is platinum. Platinum is a metal that has been underperforming for a very long period of time. Has been moving higher in what seems so far as a corrective rebound. Just if I zoom out, you can see how battered down this metal has been, really. Just look, just before the financial crisis, it was trading at 2.3 thousand. So way above the record high that we have in gold. And it just recently, in August, it was trading down at $750. So this is just a healthy bear market rebound. What's this level? Confluence of previous support area, 200 daily moving average approaching here as well. So one more metal here at resistance. Now, what remains more or less unstoppable is palladium. It pulled down as we expected. Unfortunately, it didn't so far provide a deeper correction. This metal has really produced no real big corrective moves. Perhaps it's going to attempt to provide some kind of a larger correction when it completes. How do you call your thing here, coach? Tree drive formation, right? So you see, we already have two drives, we already have divergence twice. So perhaps it wants to push a little bit higher, and then perhaps RSI can stay lower once again, and then produce some kind of a deeper corrective move that we can buy. But there's no question about Palladium. It has broken out from a corrective move, so there's also no questioning that the move from the lows is very impulsive in nature, right? So buying the dips here is the tactic. I try to do it many times, but every single time I set some limit orders. They never triggered because the corrections were minimum, and the pullbacks were much smaller than I initially expected. But it is whatever it is. A friend here says gold looks bearish in the medium term. I agree 100%. I just said so. Zach, let me see what you're saying. What time about will Joe be on? Okay, so I already answered that. A couple of guys might want to see that, not me. Just thought about it though. It looks like consolidation before another move up. Yes, I agree with that. Hi, could you please have a look at cable? Blake, did he cover that? Even if he didn't, let me say something about cable here. If cable got rejected from this area after retesting this previous support as resistance, I think you could easily remain bearish. Now, what we have opened up here is quite a bullish scenario. I'm not saying I'm bullish yet, right? So let me point out two things having to do with the cable. First of all, we had an RSI divergence. The rebound played out much stronger than I expected, right? Second of all, because I expected after we failed from here, I actually expected that we would retest the 126 area. So we never made it to the 126 area, but if we make it back to the 132.80 area, let's call it roughly, then we're going to have the following situation at hand. We're going to have a possible double bottom scenario, right? Double bottom here. And this is very clearly, this 132.80 area is clearly a resistance area. So once we make it up there are two things you can do. First thing, short cable, knowing that you have a very tight reward to risk ratio and expecting that it might get rejected once again from there. So the risk reward is amazing. You can risk very little and potentially make much, or wait to see if this is actually going to break out, because if it does, then we trigger a double bottom formation. And since we're talking 127 to 133 roughly, it's not 133, it's a little bit lower, but let's say roughly to 133, it's 600 pips. So that roughly points up to 139, right? So if you see a breakout from 132.80, 133, things become serious, and I think that people are going to seriously get squeezed, because we know that people were very short the cable. This move higher caught a lot of people off guard, and especially there's no question there are a lot of stops residing above 133. Only by triggering through these stops, I bet that the move higher can unfold much faster than the average person expects. Okay, so it's absolutely okay maintaining a bearish outlook as long as we remain below 133. But I think that if we get past 133, the market is going to squeeze higher. It's going to move up to first 136 in no time. That's my personal point of view here. This is a very good question. If we have a tradable, we had a question first of all about the USD CAD, so let me cover that because they're related. There's one question about the USD CAD. Let me be clear about USD CAD. I said it many times. This move lower has absolutely all the corrective characteristics that you expect from any move. Okay, so I think this is a correction, and USD CAD is going to have one more leg higher. But have we broken out from here yet? No, we haven't. And as long as we don't, nobody says that we can have one more leg lower before higher. So a breakout from here, a daily close above 131.50, I think starts another leg higher. But until that happens, you have to respect the fact that this is a complex correction, and a complex correction that has started in the beginning of the summer. And why not? It's already November. Nobody says that it can keep playing out for another month, right? So I won't be jumping the gun here. I do expect a break higher, but it might happen later. And to finish up with this, because we have a very good question, the question was, is this a tradable low in crude? I'm not sure yet. What I can tell you is that we had a lot of people in our chat room are talking about wanting to buy it. I personally want to be buying crude anywhere between 61.07, which is the 127% extension of this move higher, and 59.50, which is the 50% fib of the whole move higher from the lows. I'm hoping that I'm going to see one more leg to the downside. But we already had 7 consecutive days lower. We hadn't seen that in a very, very, very long time. Crude is very, very oversold, and I'm monitoring this descending channel. I'm not sure yet that we have found the low, but I think that we're very close in finding at least a short-term low and seeing some kind of a rebound even before moving lower. So I think there are money to be made in looking for a rebound in crude, but I need to see more price action. Yesterday's candle was a bearish one. So far today we have an inside candle. An inside candle might just be a consolidation. So let's give it a little bit more time before we can determine that. I can tell you one thing for sure before Dale starts his interview: 63.60 to 63.80 is previous support area. Expect this to be the first area of resistance. So as long as we remain below there, you need to keep respecting the potential for more downside. Sorry for bleeding in for a couple of minutes in your interview, coach.
Okay, no problem, buddy.
Okay, so enjoy the interview, and we'll be back here tomorrow as always.
All right, great review, Steve, as always. Hiya, Leo. Looking forward to having a conversation with you, buddy. So I'm now going to make you the presenter so we could hear you and possibly see your setup. Everyone, welcome Leo Hermoso to our community. At Leo Hermoso is his Twitter handle. Nice to meet you, Leo.
Hi, how are you doing, Dale?
I'm doing fine. So thank you for joining us live from Brazil, right? Yes,
it's a great pleasure to be here and a great honor to talk to you and to you all.
Well, I didn't know it till I went to your website, but I know your partner. He's a great guy, a lot of integrity, has been a pretty good, really a good supporter of me over the years, Miad. So you guys have a nice little team going.
Yes, Miad helps me a lot because his ability of reading news is the one thing that's lacks for me. I am more a math guy, statistical guy. So I prefer not to read news, not to try to interpret it, because sometimes you guys know that Brazilians are passionate people, and it are easy to us to create bias when reading stuff and doing trading. So I prefer to keep with the numbers.
Okay, a lot of people in your country under duress with the economy that your country has convert. How do you handle currency? Do you convert or convert everything and try and hold dollars, euros? What do you do to hedge against a currency problem in your own country so that us Americans will know how to do the same later on?
Right now, Brazilian real is very cheap
Yes.
against the USD. So I don't need to do nothing because all the USD I have trading, I sent this USD to out of Brazil when it was it was even sorry, it was when real was higher. So until 2 reals for USD, I'm doing nothing. So
I hear you.
all the profits I have, I withdraw it every week and bring back to Brazil, so I don't be exposed to this forex variation.
Oh,
So
okay.
until now, it's working very nice for me.
All right. So I read a little bit about your background, Leo, and looks like you started on the floor where they trade the Bovespa. What did you do on the floor, and is that where you maybe met people that influenced you during your early stages of your career to do what you're doing now? Or are you completely self-taught? Because I see you're a coder as well.
Yes, I always want to be in the stock markets. So, but how the things happened was almost for an accident. I work in a bank, and for some reason they fired me. And I was in the front of my house in São Paulo when I live in São Paulo, and I met someone that worked for a stockbroker in Brazil, and I told him about my history, and he said to me, "Do you want to work with me, trading stocks?" Okay, okay. I said okay. So first time when I started trading and to talk with clients was not on the floor, was in the inside a broker, but everything electronic.
Yeah.
Um,
Okay.
so uh, when I realized that it was possible to automate stuff instead of me trading, that was a game changer for me, because trading is not easy stuff. It's very hard, and I think it's not because of the analysis itself, but because of the emotions involved.
I
So,
agree. So,
so
so is that the way? Because a lot of people have a hard time letting go. I'm speaking about me. So, for you, that could be a great reason for letting go, because I talk to people about stress levels and what it is like to have a trading career and be a discretionary trader. That you have to learn to handle things in your head. It's all psychological. So eliminating that and going to something on autopilot, for me, my biggest challenge would be learning to let go. But you have found by letting go and having it automated, it's reduced the stress in your life.
yes, for sure, man. And it's even hard to let it go when you depend on that money to pay your bills and to live. So sometimes I have a joke that I made here with my friends. Sometimes my wife asked me that she
Yeah.
wants to buy a refrigerator, and I said no, this month we can't. And in that same day, I have a losing trade that was exactly the price of the refrigerator she wants. So, and I
Yeah.
thought, so you have to have a good mind and a good mindset to be
You got to
a
be
great
tough.
trader.
You got to be
Yes,
tough.
yes.
Really, mental toughness is everything, because did you tell your wife that you just lost some money that you could have bought her the refrigerator with?
Never, never.
Just checking, buddy. You know, happy wife, happy life.
Yes.
Anyway, so what are we looking at here, Leo? I see that you trade through Pepperstone, or at least that's a platform. We're looking at the S&P 500 here.
Yes, but what I want to share with you guys, it's a different stuff, because you Dale and your associated make really great analysis. So I don't want to rain where it's wet. So I want to show you another stuff that I do. Okay.
Okay,
So what
and
I
and thank you.
this is the dollar.
COT, COT.
Yes, yes.
Okay,
So
go ahead.
a lot of people look for non-commercial positions to know where the market's going. But I have a different view, because I think that non-commercials buying and selling, they fuel the trends, okay? But
Yes.
the commercials, they are the ones who start the trend. So
Okay.
what I want to do is to buy bottoms and sell tops, and I think it's what everyone wants to do. So
Everyone tries it.
yes. So if you think about
I can
if
do it.
you I'm
Go
trying
ahead.
to and if
You're
you think
looking for
about,
turning points. You're using this for turning points.
yes, perfect, perfect.
Okay.
And right now, what this data is telling me, it's probably we have a top for now on USD,
Okay.
and we may have the next 6 months of profit taken, and maybe a uh, new lows for, new lows for the USD. Okay, so
New lows like levels, new lows as far as what? You mean under the 88 level?
yes,
Okay.
yes, I think
Okay.
it's very possible. And one thing that sometimes people think it's coincidence, but I think it's not. For example, yesterday we have the USA elections, and
Right.
everybody was telling if he got lose control, we are going to see a sell-off in USD. Okay, so just like a coincidence that the last week was the last week that my model predicts that we are going to have a, a, a
A high in the
non-commercials.
dollar? High.
Yes,
Uh-huh.
yes. So
Okay,
right
because it
now,
was kind of a stop hunt. It took out the 97 and change level and made a marginal new high and shook out dollar bears before it turned down.
yes, they, and even COT data was telling us this. Okay, so right now I think it's not the right moment to long USD. I think it's easiest. It's easy to short it. Okay, because we have commercials with very high long position, short positions, and when commercials start to buy is when the trend starts from uptrend to downtrend. I think it's something that it's non intuitive, but it's how things works.
All
Okay.
right, one thing I've noticed though, and I follow commercials, okay, and you know, they have a lot of what they're doing is also hedging. It's not outright, you know, binary directional trading. And they also have, you know, a lot of them are banks, so they have deeper pockets than me. And
Perfect.
I've noticed that at times they're right, but early. Have you?
Yes, man. But one thing you have to have in mind that yeah, was exactly what you said, that commercials, they are not worried about trends and downtrends and things like that. They are worried about their cash flow. Okay,
Okay.
so if you have a rising USD, of sure they are going to short it. They're still shorting it, short, until they don't have to short anymore, and they start to do the opposite direction, not for taking profits, but because the flow of the market changed. And let's think they had in the past to buy USD because they have something to receive in USD. Now they have sent all those products they produce, and now they have to get the money back. So they are always hedging against the USD in this case.
Okay,
So
I have a question. Instead of dates underneath, you have numbers like 400, 500, 600. I'm wondering where that peak of before the commercials aggressively got short, where did that peak take place? It's right after the 500 number on the bottom graph and pretty close to there on the top graph. When was that? A few months ago? When did that peak occur? I'm curious.
Let's see. Just
How long it took them to reverse from being very long the dollar to being, it looks to me like, well, on your bottom chart, that's your lowest RSI reading on the commercials. So that's a big move. That's like a confirming move, right?
yeah. What I do, Dale, is something. There's something in statistics called the half-life of a stationary series. What that means?
Okay.
When you have a series that are mean reverting, like net positions of commercials or non-commercials, we have a expected time when you have a full cycle from full short from to return to the average. Okay, and
Mhm.
right now this cycle is 28 weeks, and if we look to the charts and this 500 point right here, we may
Yeah.
see that that point was near 88, 1888.
Yes. Okay.
Yes.
Yeah.
Okay. So it's COT data. They lag a little, and the stops are. If you are trading using COT data, you have to have in mind that the stops are wide, but
Okay.
the run is really big. Okay. So when
Okay.
you cap the trend with them. So uh, to corroborate my view, I have another chart here.
Okay. And I'd also like to ask you, since one COT has been getting so much attention, has been the record net short position in gold, that instead of even during the rally from under 1200 to above 1200, did not correct. It in fact became even more extreme. And wondering what your view is there in the gold. Everyone wants to know, you know, Goldfinger, you know, everyone loves only gold. So I mean, if you have that look, it's been very, 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 so near exhaustion,
We
and go
have
long. Okay.
was in October 9. We have the last signal to go long on gold.
Yes.
Okay, according to COT data. So what I do is I get the open interest from both commercials and non-commercials, and I saw when was the peak on open interest. Why I do that? Because the open interest peaks really use shows when they buying capacity or selling capacity is near exhaustion, or in other words, the money, they are running out of money, so they need to take profit. Okay, so right now I think it's possible we see more highs in gold. Okay, because not is showing here that we have a reversal on this starting trend right now. If you look here at the quote index for the non-commercials, and
Yes.
let's remember that non-commercials are the ones that fuel the trends, so they are just starting. They are just starting a new trend. Okay.
Okay. They're just getting on the long gold trend.
Yes. Yes.
But the commercials are still huge net shorts. Is that correct? Or they're
Yes.
long?
Yes. But no, they are here. They are net short.
Okay.
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 So they are going to change positions right now, and the trend will continue to do uptrend until we see the data change. So right now I have no reason to believe right now that gold is going down.
Okay.
Okay.
Appreciate it.
And adding to it, we have here the same stuff with the euros commercials. Okay, so this is a little bit conflicting with the position on USD, because code says to us that we may have a little more room for downside on euro. Okay, so
You mean would it be under like 113 that we could take out the recent lows of 113?
I don't know, Dale, because there's another thing that I look that that is the option market.
Yeah.
And right now
You look
options
at where the most open interest is in a particular strike price, and do they act like magnets of where the market will be when those options expire?
yes, and right now options are screaming to 1.18. Okay,
Mm-hmm.
I think
Mm-hmm.
they are going to push the price until 1.18, and after that, I don't think this is going to break out. I think we maybe we see 1.13 again, and then 1.18 again, and we are going to stuck in this range until something happens like ECB hike again. But until there, I don't see reasons for that range to break out. Okay.
Okay. All
Okay.
right. And it's interesting. 118 is kind of a level I was looking at. It's almost equality to the last rally we had off 113 last time that got up there. So maybe even a little bit above it to clean out the bears, the Euro bears. But great looks and very interesting work. So you have anything else on the agenda to show us besides?
Yes.
Go ahead.
Yes, I have one more thing to show for you all. Where this is one thing that I'm being working for quite a time. Just to find it's here. Uh, I'm working is in pair trading. Okay, so
Okay.
I told you before that I am not the news guys that have a nice interpreting, nice
Yeah.
interpretation of news and things like that.
You're a
So
numbers guy. In fact, Leo, when I saw you talking about half-lives, I thought you were perhaps a biologist because, you know, they talk about half-lives all the time.
yes,
That's the
but
first
that
time I've heard it mentioned in technical trading of the markets. Pretty fascinating. All right,
so
go ahead.
what I'm doing right now, Dale, imagine if you were able to trade only RSI, only this, okay? This is going to be the easiest trade at all because forget about price. Let's say the RSI go to 30 and then go to 70 and to 30 again, so it's going to be an easy trade. You buy in 30, sell in 70, okay?
Yeah.
So we can do that with price. The same stuff right here. Here we have a chart of USD CHF and
Yeah.
CAGE CHF. What I did was to create a new series. Okay, you can see here in the bottom
Yeah. So
a new.
they line up pretty good with highs and lows.
Yes, man. So what I do, for example, when the new series hits this point right here, okay,
Uh-huh.
what I do is I sell one unity of USD CHF and I buy 0.9869 units of KCHF. What this series is telling me that we are going to revert back to the zero. So this is a perfect mean reversion trade.
Wow.
Okay, and I don't need to read news. I don't need to know where the liquidity point are or supply zones or even read code the COT data. Okay, what I have to do is I only to run models, and this is one thing that I want to show for you. It's right here. See the blue line, it's GBP USD, okay,
Mhm.
and the red line is Euro USD. One thing that very few people know is if you get the Euro USD price and divide it by the GBP USD price, you get exactly Euro GBP price. Exactly. Okay?
Wow. Yeah.
Because you remove USD from the equation and only thing you have is Euro against GBP. So why I think about pair trading and why I think Forex is too hard because even if you only trade Euro USD, some decision on Mexico may affect your trading because of these relations. and because some big institution may be doing some arbitrage trading, okay?
Yes.
They
Okay.
may be selling euro against Mexican and buy Mexican against USD and hedging it against euro USD. So that's the reason I'm trying to stop trading directional or buying USD, selling USD, and doing this pair trading stuff. There is another example here. This is euro against GBP USD. We see that they have a relationship between them that we can explore. So
Interesting work, Leo.
yeah, yes, Dale. Thank you.
Yeah. And I love your goal is really to simplify things. You have to go through a lot of effort to simplify it, but once it's done, it looks like the rules base for this kind of trading is fairly simple.
Yes. Can you see that this new green line that I plotted right
Yeah.
now?
Mm-hmm.
That's Euro GBP. Okay. Now I'm going to plot Euro USD divided by GBP USD. You see, just changed the color of the line because the plot it's exactly the same. So what I'm trying to tell here is two things. First of all, that traders that survive trading directional, these guys are make a really good work, like you, Dale, because it's not easy. And again, and the second thing is there's a lot of opportunity doing arbitrage trading. If you consider that you can create infinite syntactic assets of currencies, okay, to trade
Okay.
against one against the other, like I showed here, like I showed here, like I showed here, okay. So that's it.
Okay. Well, what a great presentation. And, for people that want to delve into this more with you, Leo, with you and Miad, why don't you show your website? And while I'm giving the audience your Twitter handle again, it's at Leo Hermosa. And if you put your website up, which I know is speculatorstrading.com, I think that this is where people could go to find out about your work. And you have a private Twitter feed, Trade of the Week. I encourage people to check Leo out. I know Miad, and after talking to Leo, I could tell these guys are hardworking people trying to do the best for others. So, Leo, you're my trading warrior brother now. What do you think?
I love it.
All right, brother. Well, I wish you and your family great holiday season. And instead of snow, I hope pips. You have a blizzard of pips going into the holidays and the new year. And say hello to Miad for me, and appreciate your time. And really can tell you're passionate about your work. And congratulations and much success from all of us here at ForexAnalytix.
Thanks a lot, Dale, and I want to thank you again for the opportunity of the interview and talking to a great trader like you. And I hope for you all the best and for you all of the guys with you and your family. And it was a great pleasure and honor.
Well,
Have
and
a
you and we all learned from you, Leo. So it was a great trade, a great trade. You being here and you edifying our community. So that's going to be a wrap for us today in Face, everybody. Tom Lano, yes, I know new moon. Thank you for reminding me. I didn't know there was a new moon, but I'm a lunatic. And besides that, guys, hope everyone did okay with the election action. And we'll be seeing you tomorrow. And remember, don't just count your pips, count your blessings. Tell people that you care about, that you do. They're not mind readers. And we'll see everyone tomorrow for investing.com. And we have CNBC contributor Peter Bookvar will be with us, the bear. So have a great day. Adios. Thanks again, Leo. And see everyone tomorrow or in the chat room today. Adios.
Tchau, galera. Até mais.
Thank you, Leo.
Bye-bye.
Bye.